Zians in France, medley in Japan. Yep. Good, wonderful. And how are the charts? Good, well, fantastic. Namaste. Jamba. Hola. Konnichiwa. Ni hao. Good morning. Guten Morgen. Yes, good. Good to have you guys here today. Welcome to another Forex trading strategy session. As soon as these sessions are done, I upload them to youtube.com for you. I would like you to review the videos at your leisure, meaning like 5 minutes after it's uploaded, I expect you to watch it. And it is a standing rule here in our community that you leave a comment, even if it's just hello, which is okay. But really what you should do is document your takeaways, what you learned from the session. Oh, very loud. Sorry about that. Anyways, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. TradersWay is a ECN. We trade Forex, energies, metals, indices, binary options on all of the said. So thank you for being a client. We do these sessions every day, a couple of hours before the New York Open. 7:30 Wall Street time. Yesterday we went for an hour and a half. The day before we went for an hour and a half. So even though this says 45 minutes, I usually under promise and over deliver. Today I believe we will have a short session because this afternoon is FOMC, interest rate decision day. I do believe the Fed is going to hint at interest rates relatively soon. Whatever that means, I don't really know. So would you like to join me for a live webinar to cover that news event? Wonderful. Would you be willing to bring a trading friend with you? Yeah. Maybe they can't make this regular time, and that time is better for them. That'd be great. Yeah, I don't have any friends either, so because you know my friends are weird. Like they sleep at night. They go to work, and whether they're mediocre or stellar, they get a salary. They get a paycheck. And if their boss takes them out for pizza once in a while, they're tickled pink. I'm like, I don't understand people like that. So let's get going, trader. So you and I are one and the same. We're Forex trading entrepreneurs. There's something wrong with us. We know 95% of amateur retail traders fail, but still we're here every day working hard because we believe we're in the top 5%. And we're willing to work hard to prove that that's the case. And if 95% of people fail, imagine all the money that's there for the ones that win. Not too bad. Now let me remind you, however, to be fair and balanced, trading and investing is risky, not appropriate for everyone, because just like I said, a huge proportion of amateur traders fail. Probably because they lack patience and discipline and focus, and they probably don't do their homework, and they generally don't deserve to win, but whatever. Now, let's say you do all of that and you are a hero. You made a ton of pips yesterday. Well, your past performance does not predict future results. So whether you're a hero or zero, in Forex, you're only as good as your next trade. So always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yeah, Mike says 100% of traders are crazy. You know, I think I say it in my book where I'm like, hey, you can stand out on the street of a busy corner in a busy city and hand out flyers saying, hey, why don't you become a Forex trader? 95% of people lose. Like, most people are not going to sign up for that. But here you are. So there's something wrong with you, something terribly, terribly wrong. But you know what? I'm the same. Now, if you are an entrepreneur, you have this entrepreneurial spirit, which is good because you're willing to take risks, but that's also the bad side of it. That thing that might have brought you success in the past as an entrepreneur, because, you know, entrepreneurs share common traits. You know, we are willing to take risks, we are willing to work really hard, and we expect, you know, a reward. Plus, we want freedom, right? So you get all of that, but the downside to be an entrepreneur is we're willing to take the risk, and risk is a threat in this business, unlike anything else, because it's also tied to your reward. See, the more risk you take, the more reward you potentially could have, but that's a very sharp double-edged sword, isn't it? So it's you got to be careful, and that entrepreneur spirit, in many ways, in Forex is a beast, and you need to learn how to tame that beast. Because taking on more risk is not the secret to success; it's the fast road to failure. So we need to harness that entrepreneurial spirit and tweak it a little bit, and that's where reprogramming our brains is important. So anyways, let's move on to technical analysis, and then we'll get out of here, because I believe the market will move for a while and then it'll dry right up. And just after 2 p.m. Eastern Time, the Federal Open Market Committee will make their interest rate decision, do a press conference, and it's supremely important. Okay? And I think what they're going to do is tee it up for a fourth quarter rate hike. And they're going to start telling people, and that should be interesting. So anyways, let's go with how I started the day. This is what I drew at 2 o'clock in the morning, New York time. Yeah, what are you doing at 2 o'clock in the morning? Wait, no, don't answer that. So I drew this little chart here. And that's the general thought process, as you can see. That my swing trade, which would be, you know, in my mind, I say to myself, am I a bull or a bear on this trend? And as you can see, I decided to be a bear. And then I ask myself, all right, if London produces the top for the day, which it could, it may not, but if you expect the trend generally to be down, then London could produce either the top or the bottom for the day. But if I think we're going to make a lower low, it's probably not going to happen in London, right? So anyways, I was thinking, well, it'll go up. We're stuck on the 3A2. So an ideal entry point would be at the 618. For a swing. Yesterday's high, yesterday's low, 618 Fibonacci retracement predicts a 1382 extension down. Everybody following me? So that was a thought process. I'll tell you what, though, you know, I was just, you know, I did a lot of watching today, and I just, either I didn't get what I wanted, or I was just too slow or too conservative, or I had an off day. I didn't do much. But every single one of these were predicted. I just didn't trade any of it. But I stood here, or I sat here for hours and hours and hours. So I don't know what happened. So anyways, at 2 o'clock in the morning, it was here. And I thought, well, it's going to kick up off the 15. You got the 15-minute cycle. It's going to kick off support, and it's going to go on. Now, of course, you could be wrong, and it just goes down anyway. So that's that's where you got to be careful, right? So I'm sitting there, and I guess I'm ultra careful today. So I sit there, and I didn't trade when we hit the weekly central pivot point, which would have been the predictable support, right when you had the later. Why? I don't know why I didn't swallow the fly. I don't know why. So anyways, that's that. So I didn't make that trade. Should have been an easy short-term scalp. Now, in this case, what this tells me is it's going to go up for 2 hours. So it's 2 o'clock in the morning, and I'm like, well, somewhere around 4, I want to short it. So, 1, 2, 3, 1 hour, 1, 2, 3, 2 hours. Now, how many people have heard me say that, like, at least a dozen times, maybe 100 times? Right? Like, I'm not making it up, right? The time thing where I look at them, it's going to go up for 2 hours. I mean, that's literally what I'm thinking at the moment, right? So it's 2, I'm going to take the 15-minute cycle up. It's going to go up for 2 hours, then I should look to sell. And it should all be good in the hood. This should be the top of the session. Easy peasy lemon squeezy, except I didn't do it. What the hell was I doing? I'll tell you what I did. Yeah, so I was doing it on a 5-minute chart. Got my entry. Entered here. Was looking good for less than 5 minutes, and then son of a gun. So what happens? Boom! It just breaks right through. I'm like, holy smoke, I'm wrong, right? So if it's going to go up for a while, where's it going to go? So my thought process is, well, it's probably going to test 13, could test the 1, which is within the 1320, because I usually play 80-20s. So, it could do all the way to 20 before it comes down, okay? And my stop, at that point, I think I had it like 33 pips away, which means I had it like right in here, and I'm like, it's not that good, and all that kind of stuff. I'm like, I don't want a 50 pipper, and if I'm wrong, this thing just go up like a ton of bricks because of FOMC. Maybe people just want to be out of the dollar trade. So then I go back to this 15-minute chart, and I'm thinking, my trade plan was clear, right? Up to the 618, and the 618 holds. I don't want it to like go way up here, and I'm doing 786 trade, right? Did I sign up for a 786 trade? That's what I'm asking myself. Is that really what I wanted? I want to short a series of high highs on an FOMC day, and I didn't take this long, and Fooey, right? Foobar, effed up beyond all recognition. So anyways, so I take a -9 loss. That's it. I'm like, F it, I'm out. Who cares? I you know what? I didn't sign up for this. I don't want to stare at a losing trade for the next 5 hours feeling like lump a dump. Have you ever done that? Sat there for 4 hours looking like a lump of dump? I'm like, I didn't sign up for this. Like what I was talking about yesterday, the vast majority of the time, I'm at break even within 20 minutes. I don't want to be staring at -25, praying to the Forex gods to be kind to me. I'm like, you know what? That's phooey. By accident, of course, it came straight down like a ton of bricks. And then, kind of really didn't do anything. I'm a little lame for the next one that I missed. Was, okay, let this cycle up, take the 5-minute cycle. Okay, so I did trade this, just got out about here, then immediately came down. Then it hit the 21 though, right, which means the 21 could do this. But I'm supposed to be following this around. Why am I supposed to be following that around? I can tell you why. I can't tell you why I didn't, but just one of those days, man, just wasn't on or something. So I'm supposed to be setting this up, taking the 15-minute Stochastic cycle around, and had some opportunities. It didn't do much, and I didn't get an amazing trade. You could have scalped this 9 times over, but that's again not the trade I was signing up for. So why the down? And I have to show you multiple time frames now. Okay, I should have shorted cycle, which would have got me short here. You have to line it up with a 5-minute chart. So you have to trust me on it. But there's the 1 hour at that time, and then let me change this over. Un momento, por favor. Muy bien. All right, here we go. Today. The 1 hour and the 1 day. Okay, lined up with a 15-minute. Should have taken the 5-minute turn, which would have put me short here. And I didn't. Oh, there's not too many lines. Forget about it. There's not too many lines. You just have to know what you're looking at. See, I'm just looking at these things. This is a fib level. That's all I care about. It's not hard. It's not in my way. That's a fib level. Okay, that's a 50% line. That's a 618. Okay, that's all. Doesn't, right? You can see right here, 50%, 618, 382. The red ones are midpoint cycle levels. It's not a problem. There's yesterday's low. It's useful information. It doesn't get cluttered to me because I'm looking at the price action first and foremost, right? This is what I'm really looking at. This is what I didn't do all day. And then I was like, you son of a... So that's what I didn't do all day. Oh, Harry, I thought you said too many lines. You said too many times. All right, sorry. Yeah. But you know what? I don't really care that much because what would I have done? If I had shorted, I think my entry was 78. So this came down to like 50, not even 50, but the central pivot. Well, I was a bull, I would have longs, but so it came all the way basically break even. Multiple times, I'm like, would I really have stayed short? Like maybe, but it just wasn't a good trade anyways, right? But typically on the open, I should have taken this. Maybe, I just needed 5 more minutes to be ready or something. I don't know. I don't know. I was just slow. I just didn't do it. Should have taken off the weekly central. I could have done like a 1545 OCO and would have nailed it. Right? Risk reward ratio 3 to 1 would have nailed it. I mean, almost perfect. And I was looking to short anyway, so I would have taken the profit right in here. Probably this one I would have just dumped it. Who knows? I don't know. So I missed that one, and this one should have just been a disappointing, break-even trade probably. Right? Because at some point. So this is 80. I can't quite see 78, but it's about there. I with a spread and stuff, there's a very good chance I would have got 0 anyways. So -9 on an FOMC day, I can recover from that, right? Do you think I will remember a -9 6-7 days from now? Right? Where like I'm hesitating on the trigger because of that -9 I had today, right? But how many times have you wanted to pull the trigger, but you were down 300, and you just, I don't know. So it shouldn't be a big deal. It's just there was a lot of things I probably should have done, but I didn't do, and maybe it's all for the better. So now it comes down to FOMC, and we'll see what happens. So the beautiful thing about Forex, if you don't blow out your trading account today, like think of it this way, right? If you don't blow up your trading account today, what do you have? Well, tomorrow and Friday are probably going to be good trading days, right? So, like, do I need an FOMC day? You know what? The market could dramatically move today, but I don't need the risk per se, right? So, for example, many years ago, I don't know, 13 years ago, 12 years ago, I don't know, something like that, I took myself on a business planning retreat, and I did a pro forma cash flow statement for 3 years of future trading, because I realized every time I was a success before Forex, and I was written up in several magazines, actually probably a dozen magazines, based on my entrepreneurial life before I ever got into Forex. So it was already a success. And I was struggling, going through a struggling period with Forex. And I asked myself, what did I do in the past, in my past life, in my non-trading life, in my entrepreneurial life to make me a success? And I realized I always had a business plan. That's who I was. I mean, I always had a business plan. I'm like, well, I don't have a business plan for my Forex trading, but it is a business, right? So I did this whole thing. So long story short, I do this pro forma cash flow statement for the next 3 years of future revenues. And from that, I derive a lot of things. And one of them, which I don't talk about much anymore, but one of the things I came up with was minimal acceptable performance. This was important because it sort of gave me, not really a goal, but a performance measure to use when measuring my performance. Duh. But I also realized by doing this pro forma cash flow statement, so many powerful things. If I could just achieve a bare basic minimum acceptable performance over the long run of quarters and then even years, my success was guaranteed. Right? My success was guaranteed. And that I didn't need to make a lot of money on a day like this. Like, FOMC could be amazing today, guys. The Euro USD could move 300 pips. And what I learned here is it doesn't matter. The number one thing was capital preservation. Because if I lost 50% of my accounts today, because of something stupid happened during FOMC, and it's not even my fault, but I lost 50% of my account, I'm going to have to get 100% return on my account to get back to where I used to be. And let me tell you, doubling your account, conservatively is not an easy or certainly quick thing. So I realized the biggest thing was not to lose money, and the second thing is let compound interest make you a success over the long run, and that there was no pressure today to outperform my minimal acceptable performance. Now, if the market's moving, make as many pips as you can conservatively, because it's going to pay for your bad days. But at the end of the day, your bad days get washed out by your unusually good days, and just sort of the law of averages take over, and your boring, simple, decent little days of making 15 or 30 or 50 pips on average, just all of a sudden, at the end of a year or 2 years or 3 years, is a phenomenal success. And then I don't need the risk. I don't need more risk today. I don't need to try to make 300 pips on the FOMC today, because I'll just do it slowly over time without the risk factor. And the only thing that mattered was the risk, because the drawdowns like can't afford, and the big booming huge days are nice, but you don't need them at all. And it just took a weight off my shoulder to know that. So it was very, very liberating. So that's another way of looking at it, where like today is going to be an important day. So how did I behave? I was worried that here the technical analysis doesn't fulfill itself the way I wanted it to, and I guess I was right. I mean, it did come down, but not like I wanted it to. And a 50 pip range for London is small. And I was worried that maybe because of FOMC, everyone just decides to get out, and this thing goes to, I don't know, 1320, 1350 before it turns. I mean, just don't really know. And I'm like, you know what? I'm not willing to take that risk. Right? And another way of looking is, I just want the easy pips. If I have to work for it, you know, why would I want that? If I wanted hard work, I would have been a farmer. So that's it. So that was probably my thinking. There were some other decent trades out there. You know, we know the pound. If you weren't in it 3 or 4 days ago, there was no need for you to be in it today. We might have talked about this a day or two ago. Yeah, I am from Saskatchewan. That's right, Johnny G. I think we talked about this earlier. Let's go to a 4-hour. Somebody said something about something. But we were talking about how it has been in an uptrend, and that these markings here, like Carney making comments and stuff about, don't worry about the deflation story. And off we go, you know. So like on an hourly chart, what's been the trend the last few days? Right? Higher high, higher low, higher high, higher low, right? Higher high, higher low, and then now our move. Yeah, Ron brings up the thing about that is something I mentioned yesterday about, you know, your performance versus what the market did, and that's a beta analysis. And you know, in some ways, because I tend to be a macro trader, that makes me a beta trader as well. Alpha is my ability to measure beta. My macro is that I'm a beta trader. That's or my alpha is I'm a beta trader. What I mean is, you know, like I tend to do things like this. I'll look at the dollar and I'll say, is the dollar strong or weak today? Is that a question of a pair or a market? And it's a market question, isn't it? What's the market for the dollar? I didn't say anything about the British pound. I look at this chart and I ask myself, what's the dollar doing? Am I going to buy the US dollar today, or am I going to sell the US dollar today? And that's what the beta is. The beta is a measure of the market in general. And if I see that the dollar is strong today, I'd like to buy it across the board. And if it's mixed, I tend to just walk away because I don't like the market conditions. So if the market moved, you know, 100 pips and you made 50, you underperformed, per se. We had talked about before, when you look at risk-adjusted performance, and any of your investors that get involved in your trading, all right? So let's say you start a managed program, you're going to manage someone's money. One of the things they should look at is risk-adjusted performance, and they should use beta in some of their measurements, because what happens if the market didn't move very much in July, but in July you had a 20% return? What does that tell the investor? The beta is low, your return is high. How do you achieve such a thing? And by the way, any sophisticated investor is going to do this, so get on board, get on the clue train. How do you outperform the market when the market didn't move? Yeah, more risk, or another way in Forex is more leverage, right? Your lot sizes were too big, right? So, for example, you could have, let's say the market moved 50%, but you doubled your lot size to account for that. So you're only making 20 pips, but it's paying you for 40 or something like that. What you did is risked the investor's money. And the investor's like, I don't want you to risk my money. I want you to make me money. And so they'll walk away. You're dead in the water. So anyway, so you can measure performance many ways, right? So if the yen's over the course of 3 weeks moved 1,000 pips and you made 200 and you're happy, well, congratulations on the 200, but you missed 5 or 6 pairs that went up 1,000 pips each. You missed the boat, no matter how happy you are. And you might be happy because, you might measure your success in money, which I think is a real failure. So you say, well, Wayne, $1,000 is really good for, a couple of days' work. I'm like, not when you should have 20,000. Then it sucks. And, right? So anyways. So that's how I look at that stuff. So Piggy, anyone going to try the pullback? I see a cluster in here around 57. You think it'll go down that far? It's hard to say, huh? Maybe kick it off to 21. Okay. So what I'm looking at here is you might want to find a midpoint psych level as well. But the general idea is this. Okay. Oscillator says get ready because this ain't funny. So roll it over on the Cinco and you got permission to engage. Roger that over. If you're a bear, your short zone's here. Boop. Mark says, do you think it's time to short the pound yen? Just the way that sounds, probably not. It just, the way you said it doesn't sound like something I would want to do. So that's it. All right. So if you shorted that, you're a degenerate gambler. No offense. It's in the Geneva Convention. If I say no offense, you can't take offense to it. All right. The reason for it is there's no pattern. So for me to short this, I would want to see that. You got to be short here. The next way to short this would be here. Okay? Okay? Oh, do you want to see another fantastic trade I missed today? It's like my fabulous day of almost, but didn't. Here's this was like free money that I just threw away. What chart is good for this? I have it on a daily. Hang on, I don't even have it on this computer set up the same way. I guess I do. This needs to load. Because there was a nice little trade. I guess it's about here. I think this is where the daily central is. I don't know why this hasn't updated. These are all going to move. The reason MT4 is so light as an application and so fast is that it doesn't run your charts in the background. So these other 150 to 200 charts that I'm not looking at right now, they're not updating. A previous form I had run by EFT, the Dealbook 360, would run everything even if you weren't looking at it, so it was slow. Boom. So it just updated and did the calculations. There you go. And there's the central, right? Look at this. Doop, oops, doop, doop, doop. Can you see the one I missed? Okay. Breakout, retracement, long and gone, son. Up, down, down. Of course, I could have done this all day, but you know, just no, I don't do that. I tend not to do that. Boo. But there's the pattern anyways, okay? Okay. Should have been on that. I mean, just because remember, I was short Euro USD at the same time, right? Which means euro down, dollar up, right? Right? So I'm already thinking dollar up, so like, why the heck wouldn't I have done that? Bet on the wrong horse. Oh! Yeah, well, Ken, that's the whole reason for it. Midpoint, psych level, central pivot point. It's the whole thing. You got it. The whole thing right there. So unbelievably easy. I don't know what I was doing on that. I guess for that period of time, I just wasn't looking at it. It's just, you know, I don't know, just slow today or something. So, USD CAD was an interesting one today. Oh, it looks like we just missed a bounce at the midpoint cycle. Oh, nice. Let me update these charts. I'm going to change the temp on us on the template. And we just missed the midpoint psych level right here. But look what it did. Amazing, huh? London open, up, down, up, down, up, 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 down, up. Right into the 618. Same sort of plan, right? Same sort of plan that I had for the euro dollar. Coulda, woulda, shoulda, maybe. You know, so you got the 618 Fibonacci retracement, yesterday's range, and yesterday's range is from there to there, so that's the 618. Weekly central pivot, but I wasn't looking for it to go all the way up and then all the way down. That's faux show. But this could have been interesting at the midpoint cycle level, at the long it. A couple of trades maybe that I was looking for didn't get. One was Aussie dollar. I'll get it later, just fine. It might be after the FOMC or something, who knows. Let me show you what I was thinking here. I need more data. Template. All right, there's the psych level, so let me mark that. I love Aussie dollar on psych levels, just love it. And what I was hoping to see, let me get an arrow going here. What I wanted to see was down, up, down. Nope. So didn't get that one. Dollar index has really just been sideways, and I don't have one on this platform. Keep your eyes on that pound dollar, guys. It's getting closer and closer to the 15-minute 21, and that's definitely a buy zone. And it's been red candles for about 2.5, 3 hours, so it's going to be a great opportunity to buy it right before the New York Open. If you want to take that up to the next level, if that's what you're thinking. I think there's also is it a weekly pivot point? Here, hang on. My pound dollar chart is so far away I have to stand up to see it. Hang on. Weekly R1 is 156.93, so let's just call it 157. Yeah, so a lot going on around 157, yo. I have to sit back down now. All right. Take a look at all the yen pairs. Predicted high is way up in here, 141.5. The pivot clusters going on. Let me zoom back in. Weekly M2 is the bottom, weekly M4 is the predicted top. See? M2 to M4. I'll show it on the hour, or maybe a 15. See the price action, guys? Ride the 5. Okay. 5 breaks, drops to the 21. It's called a step down. Reload. It's right out of my book, isn't it? So when you drop into the 15-minute 21, remember this is a bullish market. The only thing you're allowed to do is buy it. You're bullish and aggressive because the price is above the 21s. So when you get on or near, because very often you don't quite even touch it. It touches after you've already long and gone. So what you do is when you get into that zone, you drop into a smaller time frame like a 5-minute. Okay, so lots of red candles. Let's look at it on a 5-minute chart. So we're in our zone here. You know, the 5A cross for the Stokes cycle, you should be long right around here. Right? 5A cross is right there. So you're kind of, you should be in that green candle. Okay? If you've missed it, the pattern is higher high, higher low, gone. Right? Typically off of the roll reversal. That would be in here. Capiche? Gregor's got that? Good for you, buddy. Wait, no, that was only a few minutes ago. What are you talking about? Must have been the other one. Do I want to do Noki? Not really. But it's a good trade. Scandinavian currencies are fine. Noki and Kron. The Kron and the Kron. Yeah, they're good. I'm just going to keep it simple for the vast majority of traders. But good luck on it. Could be a good trade. All right, Kitty Cat Yen. Let's see. We kicked off of our identified bottom. I don't remember when we did this one, but clearly we did it. And we're coming up to the predicted top. I would say probably the monthly M4 would be a reasonable place to take some profit. What do you stink? So Aussie yen and Kiwi yen coming down, huh? Pound yen way up, right on the monthly M4. Definitely weakness here, huh? I think I'm going to be long yen in what, January? February? I think I'll buy it back. Did you guys get the dairy auction yesterday? Oh, Ron, I made it up. Just observation. Oh yeah, it's definitely an FX bootcamp thing. One of the only courses I ever bought, this was a long time ago, before my children were born, and they're 30. So I bought this thing. It was a course by Peter Bain out of Canada. Oh, is that right, eh? And he had this magic system called pivot points. And I think he charged like, I don't know, $2,000 for a course, and he didn't tell you how to calculate the pivots. So it was his proprietary thing, and every day you'd have to log into his website, and he would then give you the pivot points. You're like, holy grail, holy grail, right? And here's what he said. It was using pivot points was like flying an airplane. And the pivot points were the instrument panel in front of you. So if it told you to be long and price fell all day and you were losing a ton of money, that was okay. All you had to do was turn your instrument panel upside down. Like, what? Oh, yeah. If it says the market should go up and the market goes down, just turn it around and just do it that way. Like, are you stupid or something? Like, I love it. Yeah, if the strategy isn't working, just do the opposite and you'll be fine. Like, that is the last penny I'm spending on Forex. This is so funny, but that was the world I grew up in as far as Forex was concerned. Every piece of education I found was either written by a scumbag or a scam artist. And so that's why I've been doing, these free events for over 10 years now. So I don't know if it's changed, but it was all scumbags and scam artists. That's faux show. So I'm just looking at this Kiwi. I wonder if I'm going to buy it back at some point. We should probably keep an eye on like these bottoms and stuff. 84 is coming up. Could be interesting. Well, at least this one's priced right, isn't it, Mike? I hope it's slowly helping. Anyways, there isn't a fast way, but I hope they help. So dollar, yens. It's already 8:15, so it's been 45 minutes. You want to just pull the plug and then come back around 2? I'll send you an invitation. Yeah, and I'll drop you on YouTube. You can watch yesterday's video and leave a comment, right? Right, we have 54 people in the room. So today there's going to be 54 new comments on yesterday's video, right? Well, what if I made you a deal? What if there's less than 25 comments? I go golfing. Yeah, Mark does every day, I think. Yeah, let's do it that way. If there's less than 25 comments on yesterday's video, I won't do FOMC and you won't get an invitation. Okay? I'll just go golfing. Whatever, it's my time. Okay? So I'll see you this afternoon, maybe? Peace on earth, may the pips be with you, may your profits be above average. See you guys. Leave a comment.